All right, everyone, welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you've not done so already, please give the video a thumbs up. Don't forget to like, comment, subscribe to the channel. Come find Jason on Patreon and come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week. So we had an interesting week here in markets rebounding from that sell from last Friday, and we talked about this. There was kind of two paths we saw here, and one was that we would go down to test 6150 SPX before some sort of rebound, or we would just gap up Sunday night in the futures and kind of just push higher throughout the week, and that's exactly what happened. The latter is, so we had the gap higher Monday. It just kind of like a little stair step up if we look at it like an intraday. Just kind of an intraday, just a little walking up, higher lows, higher highs, and Friday right now here, market set to close very shortly, and we're right back to that 6,400 handle. So you can see 63.90 right there, and the markets are still acting well. Now the question is, can they take out this high on a closing basis, on the daily and a weekly closing basis? So that would definitely be of interest. We did have high volume selling last week, and again, I'm still in the camp here that you do have the high volume sell, and that is a confirmed sell signal, but it can be negated with a weekly close above that high. So right now the market remains strong, and we've had really like peace deal kind of talks all week, and I've been noting this very much throughout the week. It does seem that the market is trying to sniff out some sort of a deal here, and there has been lots of rumblings about Trump meeting with Putin. He's been on the phone with Zelensky, so it does seem like there's something going on in the market trying to sniff this out, and you're going to see that there's been movement in commodities as well. Like looking at gold here, gold the last couple of days is really, like even last night you can see the futures, there was a huge move on the open, and it has just really crept up all week long. I think there was I think they did add some tariff to the I think the Swiss, but the gold has been behaving very much like some sort of move is coming, as has oil. Oil finally broke through that 64 handle, and obviously some sort of a peace agreement would be bearish oil. And you're going to see that there's been big sells really throughout the week here, throughout the day, last couple of days on oil. It has held up. I mean, it held this pivot from June 24th, but there has been some weakness here, and the market's starting to kind of sniff these things out. I think that right now we're still seeing kind of a rotation, and obviously it's no secret that this Mag 7 has the top top 7 to 10 or so companies have just vastly outperformed, and it's not really a secret. This is not a new talking point here, but we have seen even within the Mag 7, Apple, this is a stock that I've been talking about as a big catch-up player lately, and this week Tim Cook just makes one visit to the White House, and they get $500 billion, and I mean, this has had a nice base here for several months, and as long as the market trend was higher, we were looking for higher prices here, and this actually hit my kind of first price target here at 230 today. So a very nice move there, and this is already starting. This is catching up, and I do think that there are, at this point, there is still the possibility of, if there is some sort of a deal, to me, a peace deal, not so much Apple, but like very heavily shorted names, possibly the Russell even could still get one more push up. If we look at the Russell futures, you're going to see we just back tested last week. All it did was just back test this breakout here, and it's held so far, and now it's trying to flag. So we could see sort of, I think, one more push here, maybe into mid-August. I still think the market is getting a little top heavy right now, and with that distribution last week, it is definitely makes things interesting. But right now, trend is more powerful than anything, and right now the trend is still up. So that needs to be respected. But right now, definitely a nice rebound for the bulls. 6,400 is still going to be a lot of resistance. We've been in a choppy range here, but we have not been able to really break through that 6,400 handle on the cash S&P, but we are knocking on the door currently. We got the triple Qs here this week right into double top. So you can see right here, triple Qs, 56473. Sorry, 57463, and we are right there right now. So the triple Qs are right into the highs here, and through that it's right up to about 580. And even though you have stocks like Nvidia that is just making a new high, Broadcom just making a new high, the real big winner here is Apple, and that's what's dragging the Qs much higher. We have had some weakness. I mean, there's stocks like Trade Desk that took a pretty good hit. In fact, all of cloud here now with really, you could argue 3 lower highs here on the daily. Not that the chart is really broken or anything wrong, but there has been a little bit of a weakness in the sector relative to the rest of the market. You can see the SMH here just making a lower high earlier this week. That was yesterday. It's technically not confirmed. We could still go up there and make the new high, but my point is you have that big catch-up play there from Apple as the big player. But yeah, anyways, Q's in the double top there. We talked about the Russell a minute ago, up 85 cents today, and that still has a nice base that can catch up here if we get one more push. You can see the diamond here of the Dow. Same thing. I tried to break out of this little flag. It failed, but then just went down to the lower end of 50 MA, and now it's basing again. So maybe the Dow makes a new all-time high again soon. So there's still some, to me, I see this, I see the market really sniffing some things out here. And even like a sector like XLP, that has started to break out. That's a defensive sector. XLU has broken out recently. Look at this monthly base. Or use the weekly base rather. But you can see that has broken out. So we are seeing some rotation, but it is a group of haves versus have-nots here. Dow transports here, flat on the day. This is definitely on the weaker side, and that's not rallying right now, even with oil backing off. So not the greatest sign to see the transports doing that currently. If we flip over to interest rates and take a look at the 2-year first, as always, this is interesting to me. So right now, put our lines back on there. We have the effective Fed funds at 4.58. I mean, we stay down in this range, we're probably going to get a September cut. So that is a nasty rejection. Last Friday, I mentioned that. If this gets any lower, gets down to this range down here, we're looking at a September cut for sure. Jobless claims this week came in mostly in line, so there wasn't any big scare there. But obviously, non-farm payroll last week, huge miss. Next month's number will be very interesting, especially if the market, sells off into it, or if it rallies into it. Obviously, on the other side of that, 5 cents and 30s yields bouncing up this week, but relatively range bound. Long term, chart of yields is still very strong. Housing here. Starting off with XHB as always, up 30 cents today, and again it made higher highs on the week. 110 to 111 still resistance on that, and then we have IYR was down 55 cents. And this one I'm a little worried about here. I think we're looking at a lower high potentially there. So we got to be careful with the REITs and financials. Again, it's nothing terrible, but again, not rallying with the market here. Possible lower high. KRE, same thing, although it's trying to firm up here, and it had a nice pivot on Friday. We also got broker-dealers here are continuing to hold up well. We mentioned oil here. It's holding at 64 for now. I don't really have a good trade on this at the moment. It had a nice rally. It turned out to be a lower high. It caught a bit off double bottom. Maybe it could be a play at $60 for a quick long. That's really the best I have on that right now. XLE, again, kind of losing this little wedge here, and not the greatest. So a little bit of weakness there for XLE. Don't really want to see that. There's XOP and OIH. The only thing I could see for these is if by some chance, by some miracle, tech does top out, usually energy gets a bid. It's usually kind of a pair there where it's like long tech, short energy, and then vice versa once tech tops out. But tech is not topped out yet, so there's that side of it. Dollar index here, it's holding on. All right, it's holding on, but that's it right now. And I know that fund managers are bearish, but we'll pull up our chart here of that. But yeah, you can see here, they're about as bearish as they've been in since what, January 05, which is wild. But right now you have lower highs, right? This, I talked about a possible rally back to 100 and that 100-day moving average. It hit it. It was up there for 2 days and then rejected. So again, needs a higher low here. You could make a case there's a little trend line that could, it could hold it up, but yeah, it needs to hold 98. So is it crowded? Yeah, it's crowded, but it's going to need a macro trigger to move. Gold we mentioned. I think that, originally a couple of weeks ago I was saying, I don't know how, I was kind of expecting a little bit more sideways in gold over the next couple of weeks to months. But the positioning in market makers has changed much more positively. And you got to give it the upside bias right now, especially because if we look at GDX, look at this breakout here. So again, new multi-year highs on GDX. And it's good to see the miners lead the metal. I just got to give this the upside bias to double top at this point. GDXJ is no different. Granted, it's way off of double top, but no different in the sense that it broke out. Look at SIL, breakout, SILJ, breakout, right? So metals are still acting well here. And the miners are leading, which is very important. Right, platinum a little bit softer, possible lower high there. Needs to move off that 50 MA and reclaim 1400 at the least. Palladium a little bit weaker here now. So it's lost that 50 MA. And if it can't reclaim that, we could be looking at 1100 and then maybe even 1050 pretty soon. Again, be careful with these two. Platinum and palladium are very fickle. They're very thin, and they go up quick and they go down quick. Copper's still hanging in there. It's holding the low. Again, I still have a runner position on this. It's just a very small, very, very small long. I mean, I'd be happy with 460, but 474 would be a nice, just a retest of that 200 moving average. But what a collapse there for copper prices. Bitcoin, lastly, still acting okay. It's down a little bit today, but I know there's a lot of ado about it made about it last week. We had a couple of down days, but it just went into this kind of longer term trend line here, and it's not really. There's really nothing wrong at the current time. It's still acting well. You still got higher lows. You're back inside of this channel, and you can see this smaller line here. As long as it's above 116, I think this is it's the trend is just very strong. And you had ETH here recently, just today I believe, made a new high, going back to 2024. So alts are still acting well as well. So Ethereum here, I mean, this is not far off all time. I mean, what are we looking at here? 4,800 to 4,000. So I mean, 800. But that's what, 20%. Yeah, so it's 20%, but what is 20% for Ethereum? That could do that. It could do that really quickly. So we could be looking at fresh new highs here in Ethereum before the not too distant future. And I do think Bitcoin will hold up. It just may underperform relatively. But crypto's still acting well here. What can you say? They're continuing to goose this tape. They doubled Treasury buybacks recently. We talked about that. And markets are strong. I do think that we could be close to some sort of a corrective move, but and again with that weekly engulfing last week, we talked about this. A lot of people are going to short into the hole, and I think a lot of people did short into the hole on Friday, which is what's giving us this rally here. And again, obviously that the move for Apple really changes things a lot, but overall, respect the trend until it ends. So anyways, guys, I'll wrap it up here. Again, you guys take care. Don't forget to come find Jason on Patreon. Come find me on carnivoretrades.com, and I'll see you guys all next week.